You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hey there. Hi there. Welcome to the show there. This is Talking Real Money. It's a radio show that becomes a podcast. And you're a part of it right now. Or at least we hope you are. If you're listening to the radio, you are. If you're listening to the podcast, you are. And we are here to enlighten you and to educate you. But we're also here to answer your questions, to try to point you in the right direction. Our phone number is 855-935-TALK, 855-935-8255. And just about anything that's money-oriented is a topic we can cover on the show if you bring it up.
As long as it's not about stop-loss limit orders,
no, we can do
orders,
stop-loss limit orders and things, too. I can do those because I used to be one of those evil stockbrokers.
That's true.
You
went straight, didn't you? Congratulations.
I took that ridiculous test, the Series 7, which was literally an all-day test.
Ugh.
You had a lunch break. Now it's a 2-day test.
Yeah, it's and frankly, it's not a test anybody needs to take.
And most of the stuff you don't use. The only thing that really that was confusing and complicated, and you really needed to know it if anybody asked, was the option stuff because it was just overwhelmingly complicated. Whoa.
If you really want to do that, then you go get your CFA and start analyzing a whole bunch of stuff.
Or you just don't.
Even then.
You just don't, and you build a nice diversified portfolio, and you forget all this complication that is unnecessary. By the way, this could be the easiest show. This could be we really don't have to do as much work as we do. We could literally sit here every single program and say, have a plan, know what kind of income you need in retirement, know your risk tolerance, understand the emotions that drive us to do stupid stuff, diversify, overweight, small in value, and build a portfolio for your risk tolerance. Thank you for joining us, and the show is over.
I get down to Duval Days right now, then.
You could go to Duval Days right now.
Sign me up. Somebody wrote and said, "Are you the Grand Master? Are you the?"
You right? Are you riding
the Grand Marshal?
The Grand Marshal.
Not happening. No, not happening.
Yeah.
Sorry.
But we can't leave because there are so many other things that you guys do.
Stuff comes up.
Stuff comes up. You guys do things that you need help undoing. For example, did you know? I bet you did not know this. But in aggregate, you guys have lost $1.7 trillion. You just misplaced it. You forgot where it is.
That's a shocking number.
You left us almost $2 trillion. Do you know how much you could help the national debt situation if you just got that back and gave it to the government?
We're not suggesting that either, by the way.
29 million lost 401k accounts in America.
Yeah, in the 401k, what is it? The greatest invention since the printing press, electricity, the internet, and maybe pensions. A lot of people are going to say I'd rather have the pension than 401k, but that's where we are today. Yeah. So this comes from a 2023 report. So imagine those numbers have probably grown, right?
Right.
And you've left them behind. It says the average boomer has worked in 12 different jobs. It's a lot. And so I think that's pretty close to where my number is when I kind of, even though I've been somewhat steady lately.
Very few of my jobs had a 401k.
Well, now that number's up to 70%. It says 70% of employers offer a plan. So there's ways to look this up to figure this out. It's fascinating. You can go to the National Registry of Unclaimed Retirement Benefits. Remember, 29 million accounts sitting out there. I did it today. I actually did this.
I didn't. I should do that.
I logged in.
When I was a young man, I had a 401k at Sears. I wonder what I did with that.
I was hoping I'd find one. The good news is you have to go through the process with the federal login thing, whatever that it sends you, which I'd already set up for tax payments, I think. So you go through that, and I went through it and found I have no money in an old plan.
I have no money.
No money. Because it takes you to the retirement savings. I went to the retirement savings lost and found database where you put all your info in and they look and they say, sorry, you have no money. But it's worthwhile. There's 29 million accounts out there, $1.7 trillion. That's a lot of money, man.
Yeah, and in addition to the National Registry, there are several other places you can search. We'll talk about some of those.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan. One that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, that was a rewarding break.
How much? You've actually got money there?
I've actually got money in two tiny little accounts. They're not. It was not that rewarding.
How much?
How much? I don't know where this one came from. It's $29 from Starbucks.
You worked at Starbucks?
No, I don't. No. I went to the.
You went to the missing money.
I went to missing money.
That's different. Yeah,
so that's an unclaimed property. I don't have a missing 401k, but I also have
I should try the missing money. I didn't do that.
I have $29 in a checking account that we closed that I thought we got all the money out of, but apparently there's still $28.93 that they had there and that they gave to the state. They gave it to the state.
Oh, it's over.
I can get it back from the state.
Oh, okay. So you're going to do it? You're going to take the time to cook for $30?
I don't know. It's $29. I don't know how much work that's
why it ends up being, $1.7 trillion. Because I'm not going to spend blank.
Why would I have $29 from Starbucks? That is so weird. You overpaid
for one of those fancy drinks or something?
I don't know. Anyway, check yours out. You got multiple choices. You've got the National Registry of Unclaimed Retirement Benefits. That's one place. You've got the Retirement Savings Lost and Found database.
That's the one I tried, and I had no luck.
And I didn't have any luck on the National Registry of Unclaimed Retirement Benefits, but I did have luck with missing money.
And, due to the fact that we have the military museum, the missing money formation is flying right by you.
That would be the missing man formation, not the missing money.
Okay, well, it's a financial show. Trying to change it up.
He's somehow going to fit in something military in every
I
episode.
have to fit it in. It's right over my head here.
Oh.
You can't see it anymore, though. This is weird. So I'm on a new computer this week, and
your face
the FaceTime
so
thing,
huge.
I've tried to adjust. It's taking up the entire frame. I don't know what the deal is.
There's a way to do it.
Sorry about the nose hair.
We're going to find it. I can't look over there.
I'm sure you can't.
It's frightening. I mean,
big.
Your face is like.
I know. It's taking up the entire Western Hemisphere.
I'm on a 13-inch iPad.
You don't want to see me that close.
Your head is like 24 inches. I don't know how you fit more head in than I have screen.
You thought my head was big, and now, wow, this is ridiculous. So sorry.
If you want to help us out and ask us a question, or help yourself out by asking a question, just go pick up that thing that you have that looks kind of like a phone. It's more like a brick of glass and metal. And hit this number, 855-935-TALK, 855-935-8255, just like Alan in Maple Valley did. Hello, Alan. Welcome to our program.
Hi, Tom. Hi, Don.
Hey, Alan. What's up, sir?
Can you hear me?
Yep.
Yes.
Okay, good. So I came into about $100,000 of tax-free money, and I want to kind of keep it liquid. At least that's what my brain tells me, because I have a wife, and she'll find some way to spend it. But I thought just leaving it, just sitting in the
Look, that's a different program. That's Dr. Phil. He's on Sunday afternoons. You give him a call, figure it out, and I'll work that out for you.
That's right. Exactly.
Okay.
So I was looking for, where can I get the most interest but keep it kind of liquid?
I want to see. I want to go back in time a little bit.
Back to the beginning of the marriage?
I want to go back to the beginning of your marriage. Yeah. I think we should fix this. No, here's the question I have. Is it going to be money you want to keep liquid? Is this money you want to keep liquid forever?
I would say so. I got great investments going in with Tom right now, and so that one I'm secure with. This is just emergency stuff, and then some good happy living coming up. So
okay.
I don't know, a year, 2 years. I'm making guesses.
Then here's what I would do. You said a year, 2 years. I would probably cut this money up into 3 easy pieces.
Ooh,
isn't that the name of a movie?
Yeah, it was.
3 easy pieces? Or something easy
10
pieces.
easy pieces, 5 pieces.
There's some easy
number
pieces
of pieces.
in it.
Yeah.
I think it was Clint Eastwood or something, right? Wasn't
I
it?
think you're right. Yeah.
Anyway, I think you should split it in like 3 easy pieces. And I would put one of those easy pieces in a high-yield savings account with, let's see, who has the best?
You can go look them up.
I'm going to look them up right now because I like doing that.
So he's just going to bankrate.com, Alan, just so you know.
Yeah. Best high-yield savings account rates.
I went.
Yeah, go ahead.
I went there and looked, and of course, my trust is not very well in things, except for BECU. BECU had some savings account that was hitting close to 4%, and then you could change it once during a year if the rate went up higher.
I'd be surprised if that was the best deal you could find. By the way, it's 5 easy pieces with Clint Eastwood.
It's 5 easy pieces. Five. If you can get 4 on a cash account, that's actually good these days. That's really good.
Yeah.
Because the best I can find is Everbank at 4.3. And don't be skeptical of these banks because they are FDIC insured.
Which, by the way, BECU is not.
Yeah, BECU isn't actually technically a more risky bank.
They got their own. Yeah,
they have credit union insurance, NCUA. Yeah. But here's what I would probably...
Okay, what's number 2 of their 5 easy pieces?
Then I am pretty confident. I know for a fact you have an account with Schwab, right?
I do.
How did I know that?
You're a smart guy, Don.
In your account with Schwab, in their secondary market, by the 1 year, a 1 year CD, and a 2 year CD.
That's the 2, 1/3, 1/3,
yep.
And then plus the.
Yep.
What are those paying now?
They're paying.
Are those callable bonds?
No,
Don?
don't get the callables. Don't get the callables.
Just checking.
I think they're paying in the 4s. Yeah. I haven't looked recently.
Give you a little diversification.
That gives you a nice little ladder. Now, what you have is you've got $30,000 to spend over the course of the next year. When that next CD matures, you can replenish your spending money or roll it out to the next 2 year CD if you didn't spend your spending money. That gives you a better average rate. Yeah. It protects you against rate fluctuation, and you have no volatility of principal if you don't sell.
Yeah, it's interesting, too, that they're all paying something similar. But at the end of the day, still, the $100,000 should be figured out into your bigger plan, because short-term money is going to pay short-term interest, right? And if it's money you're not going to use for a longer period of time, it should be properly invested, would be my take.
Yeah, but he just wants to spend the dang stuff.
Then just go out and spend it.
By the way, Bread Savings, which I use, is 4.3.
She wants to spend it. She apparently doesn't listen to the show.
I am not going to get into that. I'm not getting into that personal. I'm just, they can spend it.
We need to be careful because my wife just got in the car. So whatever I'm saying now, she's going to hear too. So Not happening. Not happening.
Good. Thank you guys so much. I mean, I would have been lost. I just would have put it into a savings account and not known. So
I use Bread Savings, and I have been very, very happy with them. It's really easy to use their app, and I can move money back and forth between Bread and my checking account should I need it.
Okay.
It's easy breezy. Okay?
Okay. Hey, thank you guys very much.
You're very welcome, Alan. Thanks for the call. Our phone number, just in case you forgot it, even though we mention it like 1,000 times a week, is 855-935-TALK, 855-935 Tom's Way, 8255.
Won't he? Will he?
Will he or won't he blow the whole?
Trying to decide
$100,000?
if you're going to take the time to go get $30. What? I don't think I would.
Oh,
the
you
money
mean
at Starbucks.
me looking it
yeah,
up?
That's what I'm saying. Will you? Or
I
will
don't
you,
know.
Won't you? I don't know.
That one. That's a cliffhanger for a future episode.
I'm waiting.
Finally, Talking Real Money has a cliffhanger. I don't even know how to do a money cliffhanger. Okay, we'll be back. Call us. We'd love to talk with you.
Tom and Don are talking real money.
At Capella University, you can learn at your own pace with our FlexPath learning format. Take 1 or 2 courses at a time and complete as many as you can in a 12-week billing session. With FlexPath, you can finish the bachelor's degree you started in 19 months and under $19,000. A different future is closer than you think with Capella University. Learn more at capella.edu. Fastest 25% of students. Cost varies by PACE, transfer credits, and other factors. Fees apply.
For your real life and real future, Tom and Don are talking real money.
And it's funny, truly our favorite part of the program is talking to you guys. We love that. And as a matter of fact, it turns out Tom's favorite program to listen to, if he's going to listen to Talking Real Money, is the Friday Q&A program.
Yeah, that's the only one I listen to. I love it. It's good.
So questions.
If you've never heard
great.
it, you should listen. People would love that. If they like this show, they're going to really like that one.
Every Friday we do Q&A. As a matter of fact, I believe next Friday I moved you and Roxy into next Friday's Q&A slot. So,
and we're doing another one this week to give you even more padding for when I'm on one of my thousands and thousands of vacations. Yeah, so
it's amazing. Most people fit in like maybe 2 a year. Tom can fit in more vacations than there are actual weeks in the year.
That's that close to reality, actually.
It defies
but you should be glad
I'm
squeezing I'm squeezing the show in between those vacations because
honestly,
it's important.
I think that we really should talk to some of the major universities because I think we have an example of quantum physics here. He actually can fit in more vacations than there is time. So he has solved the conundrum of the fourth dimension or whatever it is.
Whatever it is, it makes it around there. Yeah.
Schrodinger's cat. You are Schrodinger's person.
Don't
Schrodinger's
call me the dog.
Chicken, rooster.
Close enough.
Close enough. 855-935-TALK is our phone number. We're heading down south in the Seattle metropolitan area to the lovely burg with the wooden arena known as Tacoma. Joel, welcome to the show.
Yes, sir. Thank you, gentlemen, for taking my call. I've listened to you guys for years. I had Derek do me a plan probably 7 years back. About 6 weeks ago, you had a lady on. I think the lady's name was Joyce, and she was talking about whether to keep your retirement money in mutual funds versus ETFs, and she said stay mutual funds, and I'm not understanding why.
Yeah, so here's the thing about the differences between mutual funds and exchange. The biggest difference is the tax treatment of an exchange-traded fund versus the tax treatment of a mutual fund. Due to the method, the way an ETF is set up, it's much better to use an ETF in a taxable account because you avoid some of the taxation you face from a mutual fund. So mutual funds can still work fine in things like IRAs, Roth IRAs, 401ks, those sort of things, because the taxes do not matter. The only time you pay tax there is when you take the money out. So it may have been a question about that, Joel, where if as all things being equal, you could use mutual funds in the qualified money and use ETFs in the taxable or brokerage type money. Would you agree, Don?
Oh, yeah. But I don't remember the question. All things being equal, if I have a choice between an ETF these days and a mutual fund, I'm picking the ETF because I know it's going to be less expensive than a comparable mutual fund. Whether it's in a
but you got to
taxable-
be careful because they're creating 1,000 of these of whatever it is every few weeks, and so there's
Well, I
a
don't
lot
want
of
the new
bad
ones.
ones too. Yeah, there's a lot of
No,
bad
but what
ones
I'm saying
too.
is if I have to choose between Vanguard's total stock market index fund and VT-WAX and Vanguard's total stock market index ETF, VT, I'm going to choose VT because it's a little cheaper and it's basically the exact same fund. So,
Well, I have the three funds that you guys recommended years ago at Vanguard. I got the total stock market, the intermediate bond market, and the total international fund that you guys recommended, over the years. And, I just didn't know whether to convert them or not.
Nope.
And these funds are in,
so
I just didn't know whether to convert or not. And the gal just left it to be that way.
And so these funds are in an IRA. Is that what you said?
No, it's in a conventional mutual fund at Vanguard.
okay, a conventional account at Vanguard, there is an advantage to having the funds in an ETF from a tax standpoint.
But so remember, now you'd have to sell those, and then you'd have to buy the exchange.
But no, you don't.
Not
if
always.
You go
Sometimes
with the equivalent
you can move it right
mutual
over.
fund.
Yep.
And with
Correct.
those, there is an equivalent ETF in every one of
That's what you're
those
saying,
cases.
equivalent ETF, so you can move the money
So you can
over.
move it without a taxable event occurring.
That would then, in
So
that case,
I would
in that
do
type
that.
of account, then yeah, sure.
Yeah, I would do that in a taxable account. Yes.
Okay.
All right?
All right.
Good luck, and thank you
very
so
kindly,
much
gentlemen.
for the call.
But the three funds situation still works, U.S.,
just
international, and bond.
Yeah, just three ETFs instead of three funds. 855-935-TALK is our phone number. That's 855-935-8255. Please call, and we'll talk about money.
Tom and Don are talking real money.
Ryan Reynolds here from Mint Mobile. With the price of just about everything going up, we thought we'd bring our prices down. So to help us, we brought in a reverse auctioneer, which is apparently a thing.
Mint Mobile Unlimited Premium Wireless. How to get 30, 30, bit to get 30, bit to get 20, 20, 20, bit to get 20, 20, bit to get 15, 15, 15, 15, just $15 a month? Sold!
Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
Reality radio for a really great future. We're talking real money.
Hello again, Don McDonald here along with Tom Cock, and we're talking money with you, and we're glad you are both out there listening and calling us at 855-935-TALK, just like Sue did in Linwood, and she, well, actually is currently doing. Hi, Sue. Welcome to the show.
Hi.
Oh, turn down the radio a little bit. Kind of, we're off.
Turn down. Okay, hold on just a minute. Okay.
Yeah, otherwise it's going to get very confusing because we're going to be talking.
It'll
to you
confuse
in
me.
real time and then late time or whatever.
And I'm so
Delayed
easily
time
confused.
Dazed
I
and
really
confused. That's good. By the way, we had calls so far today. Illinois, Florida,
all right.
Ohio.
Wait, she's here.
Yeah, go.
Hold on.
Go ahead. Yeah, sorry, Sue. Sorry, Sue.
Yes. I have a question that I want to ask that I am 77 years old. Is it too old to convert to that IRA to a Roth? Because I'm paying so high taxes every year. The bracket's so high. So I don't know what to do.
Do you want to answer that, or you want me to do it?
Well,
don't bother. You're going to pay taxes one way or the other.
Yeah,
if you convert it, whatever you convert to a Roth, you're going to pay taxes pretty much at exactly the same rate you're paying it on the required minimum distributions. So
that's all you're taking out of that's all that's coming out of the IRA is the minimum.
Are you taking required minimum distributions?
Yes, I'm doing that.
Yeah.
Yes.
Okay, but are you taking more than
Are
that
you taking
out?
more than that out, or just the minimum amount you're required?
I have more IRA, but I just want to convert to just 100,000. So is it too late, or how much do I have to pay the taxes for the 100,000?
It's going to be the same amount as you will pay when you're taking it out for your required minimum distributions. It's just, in fact, it could even be higher
I was waiting to say that because you could move yourself into a higher
tax bracket.
if
So
you moved all that
at this
over.
point, no. There's no. And matter of fact, for most people, converting to a Roth, unless it's done very early and with a lot of foresight and
I
thought,
know it's too late. Yes.
I wouldn't bother at this
I didn't
point.
realize that because my husband passed away, and I have to just by myself. That's why I'm paying so high a taxes bracket, so high.
But you have to remember when that money is getting paid out, it's being paid out because you've been earning money on money that your husband and you would have paid out in taxes years ago. So you've had extra money making you money.
Yeah.
So there's an upside to this, despite the uncomfortable feeling of giving the IRS money that you thought was yours, but all along they were just lending it to you. So it was never yours to begin with. It was never your money, really. It was the IRS's money. It was the government's money. They just let you use it for a while.
All joking aside, I think when people do retirement calculations and most of their money is in pre-tax accounts like an IRA, they should immediately deduct 20% from whatever they've saved.
Yep.
Because you're going to pay that right back to the government. And Don, you make a very good point. This is money you got a tax break for and the growth you've never paid tax on. So it's all those years. And so for what it's worth,
so
hopefully makes you feel better.
nothing I can do about it?
Nope. You're stuck. I'm sorry. Wish I had better news.
Okay.
Okay.
All right.
Thanks for listening, Sue. Take care.
Yeah, thanks.
855-935-TALK is our phone number. I hate disappointing people.
Yeah, it's not fun to tell them.
But
the deal's the deal.
All of us hate paying taxes. But here, please try to do this in your head, okay? So let's say 30, 40, 50 years ago, whatever it was, you put in $1,000.
And got a tax break for doing it.
200 of those dollars would have gone to the IRS, but the IRS said, no, if you put them in a retirement plan, we'll let you keep that extra 200 and make money on it for decades.
Yep.
And we're not going to ask you for that 200 back until you retire. And then we want a piece of the action back.
Yeah, if they do what I said to do 15 years ago, and that is make all contributions Roth contributions.
You couldn't have done that, though, 30 or 40 years ago because they didn't exist.
No, but I'm saying if they start it now, just make everybody put money in post-tax and it grows tax-free, cleans up all the RMD baloney, blah.
Yeah, but you don't,
easier.
but those in high brackets don't get that extra 200 on 1,000 to borrow and make money on. I mean, I am perfectly
just
happy.
Cleans things up.
I am
Makes
perfectly
it
happy because I'm in a high bracket now, and I'm pretty sure I'm going to be in a lower bracket in retirement. I'm happy getting my tax break now and letting it grow tax deferred and then paying it back. It's part of the deal. 855-935-TALK. Call us.
Tom and Don are talking real money.
Do you suffer from financial flinch reflex? Hi, I'm Don McDonald, and financial flinch reflex, or FFR, is a widespread condition triggered by watching too much financial news and not having a solid retirement plan. Common symptoms include doom scrolling, yelling at your portfolio, and considering gold bars, crypto, or your brother-in-law's startup. Markets don't cause panic. Not having a plan for them does. The best treatment? A real financial plan, one that's based on your life, not the latest headlines. And yes, we're talking to you, future retiree. Start your financial calming regimen today with a free, no-pressure meeting with an Appella advisor at TalkingRealMoney.com or call 800-386-3004. That's TalkingRealMoney.com, because a plan is the antidote to panic. Side effects of planning may include peace of mind, smarter investing, and fewer late-night CNBC binges. Please plan responsibly. Appella is an SEC-registered investment advisor. See AppellaWealth.com or the firm's Form ADV for more details.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey there. Welcome back to the show. I'm Don. That's Tom. 855-935-TALK is our phone number, 855-935-8255. I was checking our, during the break, I was checking our reviews, and we got a lot of nice reviews recently.
Yeah, because you've been asking for them.
We got a ton of them, a ton. Thank you all so much.
Read them.
But what? Remember, there were two guys that I said keep renewing. They keep renewing
push them back up there. Yeah.
Guess who came back this week with another negative review? Boomer Me, who I think is Bob.
Yes. I think it is.
And he said that I stopped learning and that the digital age is passing me by.
Well, we are on AM radio. I guess he may be right. So,
Oh, I hadn't thought about that.
just putting it out there.
But we're also
100
podcasters.
years. Yeah, that's
And,
true.
Chat GPT and I have talks every once in a while.
You guys are getting
We're
kind of
like
close.
buds. 855-935-TALK is our phone number, 855-935-8255. And let's head up north to Vermont. Ray, welcome to our little get-together called Talking Real Money.
Hey,
Ray.
Thomas and Donald, this is Raymond.
Hey, Raymond.
Yeah, my question is about, Tom, this is Ray and the Rhino, if you remember, when we talked back last summer.
I do.
Okay, great. My question is, if
Wait a minute. Did some guy drive a
Roth IRA?
Did some guy have a puppeteer rhino during your safari or something? Ray was in a rhino?
I'm close.
All right. I guess I don't get to know.
Letting him tell the story because that's his job.
All right, Ray. What's your question? I don't want to know. I don't care.
The question is, if I'm going to take traditional IRA money and move it to a 457, does it matter on the timing of that? Meaning, like, this tax year versus, do I have to do it this tax year and wait till next tax year to do the backdoor Roth IRA? Or does the timing matter at all? Like, I could move it to a 457 today and do the backdoor Roth tomorrow.
Yeah, there's no tax ramification of any kind to move the money.
Not on a backdoor. Yeah.
Well, no, but he was talking about moving retirement money from one type of pre-tax account to another.
No, that's not going to make any difference.
Rollover.
Yeah, that's a direct transfer.
Have some traditional IRA money, and to avoid pro-rata, right? Want to move that into a different, 457 in this case.
I see what you're
saying.
saying.
Wondering if there was any timing consideration. Like, do I need to make sure that transfer is done? Wait a week and then do the backdoor Roth IRA?
Okay. I got to think this over for a minute because, so you're moving an IRA.
So, though. You're moving
an IRA to a 457.
Yeah.
And then once you move it into the 457, are you going to go?
That's it.
Yeah, you're in the 457.
Yeah, he's saying, does he need to be a different tax year to avoid any possible pro-rata situation because he's going to do a backdoor?
Wait, where's the backdoor Roth?
He's going to move the money into an IRA and then move it over there.
So you're using that to duck the pro-rata rule. Oh, golly.
Yep.
Do you know the answer to that?
We're going to have to look that up to be sure. I believe, and it would be a guess because I don't know for sure, but we'll find out. I don't know that. Interesting question. Great. In other words, as you say, do you need to do different tax years for that? It may be.
I don't know. I'm going to have to look it up.
Well, I'll keep listening.
Keep listening. I'll mention it as soon as I can find something. Thank you so much, Ray. And let's go to Texas. Jim, you're on. Welcome to Talking Real Money.
Hey, guys. Good to talk to you again. Quick question and then a comment. First, a question. The financial advisor that my mom uses, that I'm about ready to fire, I think, he recently switched to LPL as a custodian. What do you guys think of LPL?
Did you hear my screaming?
Yeah, we don't like LPL because they're a broker-dealer and bad things happen at broker-dealers.
Okay.
And in their case, they're the biggest.
So
I think they're the biggest.
That also acts as a custodian. Okay.
That's not the part I worry about. I worry about
I worry about
if he sold your mother.
I worry about what they're going to sell. If they're with Linsco Private Ledger, which is what LPL used to be called, they are commissioned brokers. They are not likely to act solely. Pardon?
I told her recently, I said, Mom, you're paying this guy $600 a month. And her mouth sort of dropped open. And I said, what do you mean? And I said, well, look at your statements. And they show the financial advisor.
Yeah, and then look at the investments. Then look at the investments he put her in. And I bet they're expensive investments on top of that.
Well, I've cleaned that up. I've cleaned that up. I've got her in AVGE and VTEB that I called in about municipal bond funds a few weeks ago.
I remember.
Okay, so that's another reason to get rid of this guy if he's going to use LPL. Now, that was my question. My comment is, you guys give good advice, and you don't charge anything for it. And I find it valuable, and I don't like to take valuable things from people for free. So I got a suggestion that you guys, every once in a while, name one of your favorite charities and encourage people to support that charity.
That's so nice.
That's nice.
Yeah, I'd be happy to send in a couple $100 as a subscription fee, but you guys don't charge subscription.
No, here's what I'd like to ask people to do.
Donation.
I would rather, because it helps the show and it helps us, and I truly mean this sincerely, I would rather, if you really believe what we're doing is of value and you derive value from it, take 10 minutes and go to Apple Podcasts and write a review.
All right, because I'm guilty as charged.
But I've got a suggestion. If it has to be money, I'd give some money to the Merriman Financial Foundation, because he's out helping people one at a time get this right, and he's not taking any money for it either. So if you just type in Merriman Financial,
already do that on an annual basis. So
you're a good man.
You're a good man. We really, absolutely, we really appreciate that. Thank you.
Oh, sorry. Can I ask one more question?
Of course.
Absolutely. I was managing my cousin's estate. He died not unexpectedly, but quicker than we expected. Anyway, he's got his money with a company called Victory Capital.
Yeah, we know them. I'm not a fan either.
Okay. I looked at their website and I didn't see anything to be real. Yeah, they look not suspicious, but again, their own funds, things like that. So
we like winning as much as the next guy, but victory isn't the way to go there.
Yeah.
So.
Okay. Well.
Sorry, Victory.
If his widow comes back and asks me for advice, I'll give her some advice. But
you're a good man helping all these people
right now. So
no, absolutely, you're a good guy. You're a good guy to help. I mean, your mom and all these other. That's awesome. So.
Yeah. Well, she's the greatest generation, right? So she's 102, and
wow,
doing fine. So
aren't many left. So we got to take care of those that are left. Thank you so much.
Jim.
We really appreciate the call.
Don't be. Okay, thanks.
Thank you. Take care. 855-935-TALK is our phone number. I did. I got the answer. One, you generally can't roll money from an IRA into a 457.
It depends. It's a plan-by-plan
Very
situation.
rare. It can happen with some.
Do it. Interesting. Okay.
But it does work if you convert from like an IRA to a 401 or an IRA to a 403, and that does eliminate the pro-rata rule once the money is now in the new account. So
you could do it the same quote-unquote tax
same time.
year.
Yeah.
That's a good point, though. The 457s might not want that IRA money. That's interesting. So, yeah, okay.
Most of the government ones don't accept rollovers from IRAs. So, I don't know. Check into that. But, yeah, it would eliminate it from what I gathered. Thanks for the calls. We'll be back.
Tom and Don are talking real money.
The new McCrispy Strip is here. Dip approved by ketchup, tangy barbecue, honey mustard, Sprite, McFlurry, Big Mac sauce, double dipped in buffalo and ranch, more ranch, and creamy chili McCrispy Strip Dip. Now at McDonald's. Ba-da-ba-ba-ba.
For your real life and real future, Tom and Don are talking real money.
I was trying to look up some of those Victory Shares ETFs, but I'm not finding them.
Yeah, I looked into the company once, and I can't remember what I didn't like about them, but I just remember I don't like them. I think the fees were kind of expensive.
So ULVM is one. I'm just going to type one in. ULVM, Victory Shares U.S. Value Momentum ETF. No, they're not expensive.
I'm trying to remember what I didn't like about the. Yeah, I'm looking at the Value Momentum Fund here, but yeah. No, maybe I misspoke.
I'm not seeing any. Again, I don't know. I didn't even know of them.
20 bips, yeah.
So they're. I don't see any
now
issues.
I'm going to have to take back what I said, but I do remember for some reason. But maybe it had to do with.
Well, they have some very eclectic ones. In addition to those, they have. But for their mainstream things, let's see. Here's one. Let's look at this one. CDL. Yeah, I have time. I can do this. CDL. Victory Shares U.S. large cap, high dividend, volume
Yeah, see, you start getting into stuff like that.
35 basis points, but they're getting into eclectic territory.
So it wouldn't be the cost; it would be what they hold.
Yeah, and for example, this one holds 102 stocks in the ETF.
Yeah.
They're not charging a ridiculous amount for it, but we're getting into ridiculous territory in terms of trying to specify the portion of the market they're owning. So.
That's not diversification. We want you to be diversified. 100 stocks ain't it.
Right. It isn't it. I don't like using the word ain't because my grandmother would yell at me.
She may be yelling at mine, might be yelling at me. I just don't hear her. So.
Anyway, thank you all for being a part of the show. This was a really good day today. We had a nice show, lots of participation. Really appreciate you being there. And we truly would appreciate it if you tell a friend or two or dozens about the podcast and the show. The show airs on Northwest News Radio every Saturday, 3 to 5 Eastern Time, noon to 2 Pacific Time. And you know what? You can listen to it on the internet. So you can listen to it anywhere in the world.
Yeah, and you can see today that we've got people that are doing that from all over the place. Illinois, Florida, Ohio, Virginia, et cetera.
Yeah, I mean, we literally covered the country today. So thank you. And if we can be of further assistance, please go to talkingrealmoney.com. Just poke around. There's stuff to learn there, see there. And
want to help you.
And you can even set up a meeting with one of our advisors. Even Tom will do it.
Yeah, I'm going to
if
take
he's
some
not on
meetings
vacation.
in 2 weeks on the left bank. So I will be
are
there.
you going to take some meetings in Paris?
Oh, yeah, for sure. Yeah.
He's going to do it just because it'll be fun.
Yeah, exactly.
Well, let's see. It's 5 hours.
No, it's about 9 hours ahead of us.
No, it's 5.
Oh, I keep forgetting.
It's 8 hours ahead of you.
I think is it 8 or 9? Anyway, it's a ways ahead. I'll call you.
All right. Or you can go to talkingrealmoney.com and send questions in that we will use on future podcasts. You can either type them or speak them in. So there's just a lot of stuff you can do there. And as we just mentioned to, what was his name again? I forgot his name.
Which one?
Jim in Texas. Jim.
Yeah, Jim in Texas.
Really, if you like what you hear, people say, well, I really love your show, and what can I do? Well, we're not asking for a quid pro quo, but if you like it, go to Apple Podcasts and write a review so that these Bitcoin people, their reviews look less important.
Yeah, well, they aren't very important.
They're not.
If you read them,
if you actually read it,
yes,
then most of you are going to go, oh gosh,
please, no. That guy, yeah,
I mean, it's in my opinion, it's all truly selfish.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.